Let's go to CommSec for a look at the markets. Craig James, hello to you. How are we looking today?
Well, the share price index on the futures exchange, reasonably good sort of predictor in terms of the market. It's down 9 points. Now, that's what it's likely to be at the start of trade. But what we saw on Friday and also yesterday is the Australian share market down significantly at the open of trade and managed to finish in the black for both Monday and Friday's session. So we'll have to wait and see. We've got a mixed lead in from overseas. Certainly weak in Europe. The declines are around about 1% across Europe. We had a key gauge of business sentiment in Germany falling for the 5th consecutive month, and German 10-year yields are at the highest in 12 years. There is real concerns about stagflation in Europe. That's weak economic growth and relatively high inflation. More positive in the United States, the Dow Jones index was up by 43 points or 0.1%. Broader Standard & Poor's 500 was up by 0.4%, and the Nasdaq up by 0.5%. The stock of the day is Amazon. Its shares up by 1.7%. It's made a $4 billion acquisition for a startup called Anthropic in the artificial intelligence space. In terms of commodities, generally lower because of a stronger greenback. We had NYMEX oil price down by 35 cents to $89.68 a barrel. Gold price down by $9 an ounce, and iron ore down by just 15 cents. $121.18 a tonne. That's still a far cry from the cost of production for Rio Tinto, BHP, and also Fortescue, around about $20 a tonne. Aussie dollar 64.2 US cents, so it's very much treading water at the moment. And today we have the weekly reading of consumer sentiment coming out from ANZ and Royal Morgan.
Okay, thanks, Craig.